buying your insurance for your business and just make it a little easier for you to understand and even save you some heartaches and problems before you even possibly get started in your own business. Just tell me when you're ready for me to really get going with the class.
We are ready now.
Okay, good.
Thank you.
All right. Please feel free to type any questions in the chat and I'll be happy to answer them for you. You should have a handout from Janice that I'm going to be going over. One of the handouts that I'm going to focus on today is called Small Business Tips and Pointers. And I'll be directing you to which page I'm on so that you can follow along on that handout. Okay. The first insurance coverage that I want to talk about for your business is called property insurance. If you are going to own any kind of business personal property that you can pick up and carry away, or equipment that you're going to be moving, you might even be buying a building for your business, that is all considered commercial property, and you're going to cover it on a commercial property insurance policy. Now, even if you're not going to own the building that you might be running your business out of, you're going to be leasing it or renting it, the insurance company is going to need to know the information about the building that you'll be in. And the reason why is because the building is going to protect all of your business personal property inside that building, or it's not going to protect it, and then they're going to have to pay out a claim. So they want to know, what year was your building built? What is the construction of your building? Is it, solid concrete? Is it brick? Is it wood frame construction? Is it newer construction, which then usually has the hurricane tie downs and things like that? So they're going to want to know, like, how many square feet you're going to have, what the construction of your building is, what year it was built. And then if your building is older than about 15 to 20 years old, they're going to want to know, when did you or the landlord replace the 4 building systems: the heating and air conditioning, the plumbing, the roof, and the electrical. Those are all things that in the building could cause a claim to happen to your business personal property inside the building. So they want to know, when were those replaced or updated? And a lot of these property insurance companies now, they send an inspector out after the fact. After your policy is put in place, they send an inspector out usually to look at your property and see if they see any concerns, or if they want you to have some fire extinguishers, or if they see a trip and fall hazard where your customers or employees might, trip and fall and get hurt. So they'll probably come out and do an inspection. The closer you are to the ocean, depending on, the construction of the building and the year built and everything, if you're going to be within 5 miles of the ocean, it's probably going to be the most expensive insurance. So if you're going to have any kind of significant values, you probably want to check to see, before you're even locked into a lease or a purchase of a building, call an insurance agent, find out if you're in a high-risk flood zone, find out what your premium would be for insurance, and just make sure that it's all affordable. Several years ago, I had a person call me. They had purchased a building in a coastal area of St. Augustine, Florida, which is just south of Jacksonville, where I am. And the insurance was going to be completely unaffordable. They asked me to shop it. I couldn't even find anything affordable for them whatsoever. And they had already put down a $10,000 non-refundable deposit or more. I can't even remember exactly how much it was, but they lost that deposit because it was all contingent on, they didn't put a contingency in there that their property insurance was going to be affordable. They were going to have a mortgage on the building, so they definitely needed to have property insurance no matter what. And they could not afford the property insurance that I could come up with. And nobody else could help them get property insurance that was affordable. So just protect yourself and make sure that your property insurance is going to be affordable. And then if you're going to be within 5 to 10 miles of the ocean, really the frame construction, the wood frame construction is usually the most expensive. And it will significantly narrow the number of insurance companies that are willing to quote your insurance. if it's frame construction within 5 to 10 miles of the ocean. A lot of them say we're not even touching it, even if you only own the business personal property inside the building. A lot of the insurance companies nowadays, if they're going to offer theft of your business personal property coverage for theft, somebody breaks in and steals everything you own, they're going to require you to have a centrally monitored alarm system. And usually it's not even a change in premium at all. Either they're going to cover your theft and the premium's the same because you have a centrally monitored alarm system, or they're not going to cover your theft because you don't have a centrally monitored alarm system. So you might want to check into the cost of getting an alarm system. For the businesses that are startups or small businesses, if you're going to have less than, say, $20,000 worth of business personal property, you may or may not be in a good situation to buy property insurance for it. And there's a couple reasons why. Usually the minimum premium is about $500 a year for property insurance, by itself. And you're going to have usually at least $1,000 deductible. So now if you have $20,000 worth of property, you're basically $1,500 out of pocket before any insurance is going to kick in and pay anything, because of the $500 minimum premium and the $1,000 deductible. So, take that into consideration. I've had some clients call me up. They had $7,000 worth of contractor's equipment stolen out of their trailer, and they're in a panic because they don't have any insurance. They've owned that property for 6 years, and they're very upset that they didn't buy the policy. And I explained to them, for 6 years, you would have paid at least $500 a year. So that's $3,000. You would have had a $1,000 deductible. So that's $4,000. And so, yes, you lost $7,000 worth of stuff, but you would have had $4,000 invested into insurance and deductibles. So you're really only out $3,000. So it doesn't always make perfect sense to buy insurance on your business personal property. But usually if you're going to lease any kind of property, like a copy machine or any kind of equipment, let's say you're a lawn care company and you have all that lawn equipment, if you're going to lease or even have a loan on any of that property, you're going to be required to carry the insurance. So find out how much it's going to cost you and what your deductibles are, what you're going to be covered for. Almost always flood insurance is a completely separate policy. Flood is rising waters or tidal surge, okay? The winds pushing the tidal surge into the shore and flooding your building. That is all considered flood insurance. Now, if it's just wind and the wind tears your roof off and it rains into your building, that's not flood insurance. That would be your hurricane deductible or your windstorm deductible. On the commercial auto policies, or not auto, commercial property policies, you're always going to have a deductible for wind, either all wind and hail, which means any kind of storm, wind and hail, or a named storm deductible. And it's almost always a percentage. And what I want you to understand is it's not a percentage of the claim. So let's say, for example, you have a $2 million building and you have hurricane damage to the building. Let's say you have $400,000 worth of damage to the building. The 2% hurricane deductible is on the total value of the building, the $2 million value. So it's 2% of 2 million. It's not 2% of your claim, which is only 400,000. So that's how the hurricane and wind hail deductibles work on your commercial property policies. And if you're going to have any kind of significant values, make sure you really understand that. We have a lot of times, we can get a quote for a 2% hurricane deductible, and our competitor is quoting a 5% hurricane deductible. That's 2.5 times. And if there's a claim, it's a significant dollar amount on a $2 million building. Okay, so really take a careful look at that. What is your wind hail deductible? What is your hurricane deductible? We can write a commercial property or a residential property. Let's say, for example, you're going to build a building. We cover that building while it's getting built under a policy form called Builder's Risk Insurance. And so it covers the building from the very start of the construction until it's completed. And that premium is based on the completed value. So if you're building a $2 million building, we write the policy for $2 million. If you're only halfway through building the building, it's probably only $1 million loss. And the insurance companies understand that the risk for them goes up, up, up as your building gets completed. So they rate those policies accordingly, okay? But they have deductibles also. And we can get, for example, on a builder's risk policy, we can get hurricane only. So if it's a hurricane, named hurricane, and they look at when it's getting close to the coast, if it's a tropical storm, then the hurricane deductible doesn't come into play on your homeowners and some of these other policies. If it's a true hurricane, named hurricane, then it will be the 2% or 3% or 4% or 5% deductible. So be real careful with that if you have any kind of property values of any, big amount. That's really all I wanted to cover on property insurance. So if you have any questions, please put them in the chat. I'm going to start talking now about general liability insurance. It's on the bottom of page 1 and on page 2 of the handout. General liability insurance, almost every single business needs to have general liability insurance. And this is covering you in case you accidentally hurt a third party or cause property damage to a third party's property. Okay, so let's say, for example, you're an air conditioning contractor and you go in to repair somebody's air conditioning. And while you're doing it, there's a problem and you start a little fire, or there's water damage, or you dropped the air conditioning and you wrecked their pool deck while you were carrying it out. You wrecked their whole pool deck. It all needs to get torn out and replaced. That is general liability insurance. Now, if you have a business that customers come to visit, customers come in your business and they slip and fall on the wet floor because you didn't have a rug out. Something wasn't secured up on an upper shelf and it falls down and hits your customer in the head. Anything that, your customer comes into your business and they can get hurt. If you have any kind of where you're serving any kind of food or, drinks or anything, it's if your customer were to get sick on the food or drinks, maybe they didn't understand that there was an ingredient in there and they got an allergic reaction, they had to go to the hospital. So it's if your customer gets sick, you almost always have to have general liability insurance, okay? And depending on how risky your business is, that's how they price the premium. So, like an office risk, that's what, my office, people come in to buy insurance. It's not a great opportunity for them to get hurt while they're coming to visit me. So my premium is very low compared to a restaurant bar, for example, that, somebody could drop a plate of hot food on somebody could slip on the wet floor, things happen in different types of businesses. Construction is a higher risk because they're out, let's say they're doing an addition to your home or business. They could really damage some of the existing structure. So there's a lot higher risk there. So the premium is more. If you're going to do any kind of a lease agreement, or if you're going to work underneath somebody, let's say you're tree service and you're going to be working for condo associations, you always want to find out what are the people you're working under, what are their insurance requirements. And, some of my clients are like, well, I'm afraid to ask. Don't be afraid to ask. You really need to know that. For example, I had a lawn care contractor. He's out mowing and blowing, residential homes all day, every day. His customers don't really ask for a lot of insurance. They don't know it's important to ask for insurance, but now he's going to go and he's going to do the lawn care at a huge condo association. And they want him to have, a general liability, 1 million each occurrence, 2 million general aggregate. and they want him to have a $5 million umbrella, which goes over that general liability policy. So it's, really, you take the 1 million each occurrence plus the 5 million umbrella, and you have a 6 million each occurrence policy. That's any one thing that could happen. And then the policy aggregate is usually double that occurrence limit. So instead of 1 million each occurrence, it's a $2 million aggregate, which means even if you had 4 claims during a year, the most they're going to pay out for any one claim is $1 million. The most they're going to pay out for that whole policy year on that general liability is $2 million. And then if you have the 5 million on top of it, now you have 2 million plus 5 million is 7 million general aggregate. So in that policy year, the most they're going to pay out is 6 million for any one claim and 7 million no matter how many claims, because the condo association requires you to carry that high of a limit to work at the condo association. Now, let's say, for example, that premium for you is $6,000 a year. You might not want to work at that condo association to have to pay an additional $6,000 premium a year. So you have to look at all the factors and call your insurance agent and say, hey, I have an opportunity to work at this condo association. They want me to carry a $5 million umbrella excess liability limit policy. How much is that going to cost me? And maybe you just pick up 3 more residential customers and take that same revenues and not have to spend $6,000 on those policies. Another thing is your landlord. I'm working with a client right now. She's going to be in a Simon Mall, and they require 2 million each occurrence. Her business is very low risk, so the premium difference for a year is only about $100 from buying a $1 million general liability policy each occurrence to buying a $2 million general liability policy each occurrence. So it's only $100 difference. It's not a big amount, but for your business, it could be significantly higher. So you really want to know anybody you're going to be working under. Let's say you're a framing contractor and you're working under a general contractor. You want to know, what does the general contractor require you to carry? Let's say you're a general contractor and you're going to be building buildings. You want to know, what does your customer require you to carry? If you're buying any kind of a building, what does the mortgage company require you to carry? Okay, so always ask, what are the insurance requirements? Okay, for the general liability insurance, all the policies that are out there for general liability differ a little bit, okay? You call your insurance agent, you say, here's what I'm doing. When I go out to the underwriters at the insurance companies, I say, Johnny is framing homes and he's never going to go above 2 stories and he's never going to do more than 20 homes a year. And he's not subcontracting to people underneath him. He has all his own employees framing the homes. That is what the underwriter is going to base that premium on. And that is what the underwriter understands that they're covering. All the general liability policies nowadays say, whatever you tell us you're doing, and we have accepted and agreed to cover you for those operations, that's all you're covered for. If you expand your operations, call your insurance agent. Make sure they're covered, okay? It's very important. And if you're not sure, just call and ask. If you're bidding a new job, let's say it's a new opportunity for you and you're going to be bidding it, call your insurance agent, say, how much is this going to cost me to do this work, okay? All of these general liability policies, at the beginning of the policy term, when we write your policy, we ask you certain questions. What are your payrolls? What are your estimated annual revenues? That's all the money that comes in before any expenses go out the door. What are your square feet of your business? What are your operations? And then at the end of the policy year, the underwriter at the insurance company sends out what's called an audit. And this is very similar to your tax audit. If you estimated your revenues were going to be $200,000, they based your premium on that. Now they're going to cover you throughout the whole policy year. Even if your revenues get up to $1 million, you estimated 200,000. Now at the audit, they're going to collect that additional premium. So what you want to know from your agent is, How much is the rate per $1,000? And then when you bid that job for that customer, you include your cost of insurance right in that bid. And then that money is sitting there when the insurance company does your audit. It's not a surprise. It's not a, oh my gosh. I had a lady call me the other day. She has workers' comp works the same way. We're going to talk about workers' comp next, but workers' comp insurance works the same way. You estimate your payrolls and then they cover your employees throughout the year. Whoever you hire and fire, you don't have to report all your employees, but then at the end of the year, they true it up. She has a $56,000 additional premium audit. That is very crippling for her. Now, I don't know why her agent didn't have her understanding that and expecting it. That's what I'm very careful with my clients to make sure. Please understand you are going to have an audit that's going to be due and you're going to have to pay more money. Okay. So find out what there's an exact rate per thousand. It might be per thousand of payroll. It might be per thousand of cost to subcontractors if you use subcontractors to do the work for you. And it might be a per thousand of revenue. Okay. And then there's exclusions on these policies. When you get a quote from an agent for general liability insurance, get a written quote. It should be at least 4 or 5 pages long, and it should have a list of exclusions. So basically what the insurance company says on their policy form, we're going to cover you if you accidentally injure a third party or damage a third party's property, except for all these exclusions. And so the exclusions, for example, all the policies are going to exclude pollution. And pollution is any kind of stinky fumes coming off of a diesel lift truck that you're out lifting to do painting on the exterior of a building. Those diesel fumes, that's considered pollution. If you are doing any kind of swimming pool contractor and you're re-marciting the pool, it's real horrible, stinky fumes. People get physically ill. That is a pollution liability policy. Another exclusion, cyber insurance. Okay, any kind of hackers getting into your computer system and getting a hold of your client's personally identifiable information, the credit card numbers you have on file for your clients and customers. That's cyber liability. That's always separate now. That's an exclusion on the general liability. Another exclusion is there's separate policies available for employment practices liability. Okay, that has anything to do with hiring and firing employees, sexual harassment, discrimination, failure to hire, you didn't pay fair wages, you discriminated when you were paying, the women got paid less than the men and they sue you over that. You didn't pay overtime, time and a half, they sue you over that. Those are all employment practices, and that's a separate liability policy that's available also. The general liability policy always excludes anything to do with an automobile, because if you're using automobiles in your business, then you need to have a commercial auto policy. So that's an exclusion on the general liability. They always now have a classification limitation endorsement. That's the one I was telling you about earlier that says, hey, customer, whatever you told us you're doing and we agreed to cover you for, that's what you're covered for. If you expand your operations, that does not mean that you're covered under this general liability policy. You have to call your underwriter and let them know the expansion in your business operations. A lot of these policies now, there's huge class action lawsuits against the big home builders, D.R. Horton, KB Homes. If you're going to do any kind of work at any tract housing development, like you're going to go in and do all the interior trim work for D.R. Horton Homes, those premiums are astronomical right now because of all the claims that are happening. Years ago, they had class action lawsuits with drywall that had sulfur in it, and it disintegrated the electrical wiring that was in the walls. So now there's a, sulfur drywall exclusion on every policy. If you are doing any kind of professional services, like drawing plans for your construction projects. That's a professional type exposure. They're going to have a professional liability exclusion on your general liability policy. So you have to be real careful and review the exclusions. And if you don't know what it's about, ask your agent. We go over the exclusions very carefully with our clients. And we say, you know, if you start, some of them will say, any work done over 4 stories, you have no coverage at all. So now you know, oh, geez, we have an opportunity to work on a 5-story building. You have to call your agent and say, hey, we have an opportunity to work on a 5-story building, and do it before you're locked in on your bid, because the premium might be $20,000 more a year to work on the 5-story building, but then you didn't include the $20,000 in your bid. Now you thought you were maybe gonna have profit, and now you're not gonna have profit because you have $20,000 more to pay for your insurance. Okay, so if you have any kind of restaurant or bar or any kind of an establishment where you're selling any kind of alcohol, beer or wine or hard liquor, you have to buy a liquor liability policy to cover that, even if it's beer, wine. It's all called liquor liability. Let's say you're not even selling it, but you're serving it. You have to buy a separate policy if you want coverage for that. Okay, and then if you have any kind of a restaurant or any kind of an establishment where you have people having a good time, fun place to be, you can either buy coverage, it's called assault and battery, or you can have that excluded from your policy. And with all these crazy people going in and doing mass shootings and things like that, you know, you don't have to do anything wrong to get sued ever, okay? Just having that establishment, somebody came in and started shooting your customers, you're going to get sued. And either you're going to be defended for it or not. If your policy excludes something from coverage, that means they're not even going to defend you if that happens to you. Okay, so they don't even owe you a defense if it's excluded from your policy. So just get familiar with your policy when you're buying it every year. Review it carefully and make sure that you understand how it works. Another thing I want to say about general liability insurance. Remember how I told you make the estimate at the beginning of the year, and then at the end of the year, you true it up. Well, the higher your revenues or payrolls, or, if it's cost of subs that your premium is based on, the higher that is, the lower the rate per thousand typically. So I just worked on a quote for somebody. They don't quite know, they're new in business. They think their revenues might be anywhere from 400,000 a year to 2 million. Okay, so that's a big range. Now, if you pay for 2 million in revenues and you only do 1.5 million, you don't get a refund. Okay, you only, if you pay for 400,000 and you do 2 million, you do owe more money. Okay, so I don't want you to be surprised when, oh boy, I overestimated, now I get a refund. No, you don't. On these audits for workers' comp, you will. If you overestimate payrolls on workers' comp, you will get an audit. I mean, you'll get a refund. But under the general liability, a lot of the companies will not refund money. So make sure you know that. If you're with a State Farm, a Liberty Mutual, a Hartford, a Auto Owners, those companies will refund at general liability. If you're with if you're a riskier business and you're with any kind of a Scottsdale Insurance, Lloyd's of London, they will not refund money at the time of audit. So know whether or not you're going to get a refund. But one thing I wanted to mention, this client for 400,000 in revenues, their premium was $3,500 a year. At 2 million in revenues, their premium was only $3,900 a year. So only 400 more a year to put the 2 million. And then it doesn't matter if he only does 400,000, he's not getting a refund. But if he puts 400,000 and does 2 million, he's going to owe a lot of money. So you have to look at the rate per thousand and have an agent that's looking at that for you carefully also, to make sure that you're not going to owe a huge amount at audit. So I noticed that we have a question here for, let me just see here.
Yeah, we have several questions here, Vicky. One of them is about wind insurance. And the question is it required for all properties in Florida, or does it depend on the location?
Okay, I would recommend wind insurance for any property in Florida for sure, because that's one of our bigger exposures. It's one of our bigger risks. And another thing to keep in mind with the wind insurance, we have some clients that, they own 5 different residential homes that they rent out to others. And they're like, oh, just give me the higher deductible. Well, the problem is if those 5 homes are all in the same general vicinity and a storm does come through, you're going to have 5 homes damaged and 5 hurricane deductibles instead of 1. So just keep that in mind. But if you're going to have a mortgage, you're going to be required to carry wind insurance. Okay. If you don't have a mortgage, you don't have to buy wind insurance, but now it's your asset. I would recommend it, but always get the cost difference between buying wind insurance and not buying wind insurance and make a decision. Sometimes it's just astronomical. We have one client, for example, they have a store right near the beach, within a couple thousand feet of the ocean, and they have another location further inland. They feel like if there's going to be a hurricane coming, they're going to have warning. They're going to go to the store at the beach. They're going to load up a couple pickup trucks full of all their stock, and they're going to move it inland. They could not afford to buy the wind insurance at that location. So they knew if a storm was coming, they had to get their stuff all moved. Okay, what's the next question?
Yes, we have a question about an online business. It's non-lethal devices they sell, and they're wanting to know if there's any recommendations for a veteran. So I think this might be a 2-part question. Does being a veteran have any kind of advantage or discounts for insurance? And also then the original question about having an online business for selling non-lethal devices. I'm not sure what type device.
Okay. If you have an online business selling anything, you can get sued. Okay. Now, if you're buying from a distributor inside this country, they might defend you and protect you for their product liability. Okay. So let's say, for example, you are selling tasers and you're buying them from a company inside this country that's going to defend you and protect you if somebody claims they got hurt by the taser. Then you may or may not need to buy insurance for selling those tasers. I always recommend it. I always recommend at least looking at how much is it going to cost me to buy the insurance. Always find out how much before you say I'm not going to buy it, because sometimes it's a no-brainer. Okay. And the more revenues you have, the bigger your risk for getting sued, and the bigger your risk for somebody else owning your company if you don't have insurance. Or you could end up having to pay a monthly, payout to somebody for a claim that happened. Say the judge says, okay, you're at fault and you didn't have insurance, just go ahead and pay $10,000 a month. Okay, maybe your insurance was going to cost you $8,000 for the whole year. So look at and always get a quote. Now, I'm trying to think if there are any insurance companies that give any kind of a discount to veterans. I cannot think of any right now, but when I have a veteran, I always put it on the application, because a lot of the underwriters hold veterans in high regard, and they know that they're a step above your average contractor out there because they have the discipline and the respect, and they're just elevated in the eyes of the underwriters. So always let the underwriter know that you are a veteran. And it's always something that's very important for me to mention in the application to the underwriter. This is a veteran. He served our country. It is a very highly respected thing to put on an application.
That's great. I know that a lot of our listeners are interested in that. And kind of going along that same line, there's a question about, are there any type of financing options for premiums? Like with car insurance, you can either pay it all at once or a couple of payments. And some of these premiums probably are a little bit shocking to some of us. So how do you handle the payment options for the different types of insurance?
Okay, that's a great question. I just worked on a little Hartford package policy. It's going to cover property and liability for my client. The premium's about $1,300 a year, and she's going to be able to make the payments in 10 equal installments. And if she does automatic right out of her checking account, the installment fee on that policy is $3. So 10 installments, that's $30 added to the premium for installment fees, but well worth it because then she has the cash flow and she can just, pay that monthly amount for 10 months in a row. If she didn't do automatic out of her account, it was going to be $4 per installment. So it was $1 more. So find out if there's an installment fee. Usually it's cheaper if you do EFT right out of your account. Now, some of you might have a good credit card where you are going to get nice points for travel or however you use your points, Costco, wholesale center, whatever. Some insurance companies don't charge you at all to put that whole premium on a credit card. They don't charge a credit card fee. Some of them do. So find that out. We have different insurance companies that we work with that do not offer a payment plan at all. The ones that don't offer a payment plan, we can get a premium finance company to offer a payment plan, and it's very easy. Here's how it works. Let's say, for example, your premium is $2,000 a year. You have to pay 25% down payment, okay? So you have to pay, I didn't think about having numbers ready.
About 5,000.
How much?
5,000, I think.
No, $2,000 times 25%.
Oh, okay. I
250 plus
misunderstood.
250 is $500.
Yeah, 5,000.
Okay, so $2,000 premium, 25% down. You have to have $500 down payment, and then you can make monthly installments. So what happens with the premium finance agreement? We have the relationship as your agent, and so you pay us that $500 down payment. The premium finance company pays the insurance company on your behalf the remaining $1,500, and then you pay the premium finance company that $1,500 plus finance charges. And you should know exactly what those finance charges are. It should not be a secret. We circle the amount. We say, here's what you're going to pay in finance charges. And that's for the whole 10 months that you're splitting it out. That one chunk of money on the agreement shows how much you're going to pay for the whole 10 payments, and it's included in the installment amount. So just make sure you understand. We have clients, for example, that say, I'm going to put it on a premium finance agreement, but if I get the money, I'm going to pay it up faster. Okay, here's the thing about these premium finance agreements. They get earned very quickly at the beginning. So let's say, for example, your finance charges for the whole policy term are $200. And now you're 3 months into it and you want to pay it all off. You probably paid, 150 of those $200. So if you do the premium finance agreement, you might want to take advantage of having those installments. Another thing is, if you have a premium finance agreement and you pay late, then they add fees on top of that. So just be real careful. There's all different ways to premium finance agreement. You can log on and pay it yourself. You can have it automatically transferred right out of your checking account. You can call your agent. They can help you pay it. So there's all different ways to pay it, okay? They'll send you an email reminder if you're late. Some of them will send you a text if you're late. Some agents don't call if you're late and it just cancels. We call our clients and tell them, hey, your payment's late, in case they're on vacation or their parent was sick or something and they forgot about their payment. If you have a policy, let's say, for example, you have a commercial auto insurance policy and you miss your payment and your policy cancels. Sometimes you cannot get it reinstated. If you go more than 30 days without having insurance, some insurance companies will not even write your policy at all. They kind of look at it like you're just irresponsible and we're not going to take the risk on you. However, if you let it go more than 30 days and now you have to write the policy again, it can be double the cost, okay? Because there's advantages to having previous insurance in place. And for all of you that are considering starting your own business, if you're going to be using your vehicle in your business, I highly recommend right now, increase your limit of liability on your personal auto policy to at least $300,000 or 250,000 each occurrence, 250,000 per person, 500,000 per accident. That's a split limit. Increase your limit now, because then if you're going to have to buy a commercial auto policy, they consider that past coverage and you get a discount for having covered those limits already. If your limits are only like 10,000, 20,000, that doesn't even count for prior insurance. So you don't get that discount, and it can be significantly more money to buy the commercial auto policy. So are there any other questions?
There are a couple of questions that I've got here, and you kind of touched on that one just now. Somebody had asked about the use of a personal vehicle. If you're a consultant and you don't use your vehicle much, but say, for instance, you may need to go to the post office and drop off something for mailing for that business. If it's very sporadic that you would use your vehicle for business, is that something where you should get a separate policy for commercial or business? Or just
Okay.
let your insurance company know that you might occasionally use it?
That's a great question. Let's flip real quick to page 3 of my handout, commercial auto insurance. If you're going to just be using your vehicle here and there to run to the bank or whatever, call your insurance agent. Usually that is fine on your personal auto policy. If you're going to be advertising your business on your vehicle, you know, some people have their whole vehicle wrapped or placards placed on their vehicle advertising their business, you're probably going to want to buy some commercial auto insurance. If you're doing any kind of delivery with your personal vehicle, almost all of the personal auto insurance companies on your personal auto policy, it says what's excluded: delivery services for any kind of business. If you're going to do any kind of Uber or Lyft or delivering groceries, that's all excluded from your personal auto policy. Any kind of transporting people for money, all excluded. Okay, but if you're going to be pulling a trailer, we have some clients that are starting out a food trailer business, and they're going to be pulling their food trailer behind their personal pickup truck. It's not going to be covered. If you get in an accident and they find out that you're pulling a food trailer to, you know, one of the places where you're going to sell your food in the food trailer, they could deny the claim altogether. If they deny the claim, you can have your wages garnished. You know, you can have a suit against you. They can put a lien on your home. Be real careful, okay? And, you know, another thing, let's say, for example, you're a lawn care contractor or something, you might be buying $300,000 worth of limits for your auto insurance for your business. That's if you hurt somebody else with your vehicle, or you cause property damage with your vehicle that you're using for your lawn care business, that's a $300,000 limit that they're going to pay out for any one accident. Let's say, for example, you're going to go do the condo association. They might say you have to have $1 million limit on that commercial auto, and that can be significantly higher. So that's another area to check out to make sure. Non-owned auto liability insurance, okay? That's a very awesome coverage. And if you have certain types of businesses on your general liability policy or on a package policy, you can buy non-owned auto liability. What that means is I have an insurance agency called Zelen Risk Solutions. My insurance agency doesn't own any vehicles in the name of Zelen Risk. I, Vicky Zelen, own my vehicle personally. But if I use my vehicle in my business and I have non-owned auto liability coverage, and I accidentally hit somebody and they find out that I'm on my way to visit a client, they can sue my business and I'm going to be defended and protected under that non-owned auto liability insurance. So if you have employees running their own personal vehicles on your business time, you can get non-owned auto liability also. One of the most important auto coverages that you can buy, if you look on page 4 on the second bullet, or the first bullet, the second paragraph, uninsured motorist coverage. In the state of Florida, we have 40% of all drivers are driving around without insurance or extremely low limits of liability. to where if they slam into you and hurt you and your family or you and your employees, they may or may not have any coverage to pay for your injuries. You can buy your own uninsured motorist coverage. This is one of the most important coverages that you can buy. Always ask about uninsured motorist coverage. If you're going to buy a commercial auto policy and you're growing your business and you're going to keep hiring people, call your insurance agent. Say, I'm going to hire Johnny Smith. Can you run his MVR? Your agent should be happy to run the MVR before you offer Johnny Smith the job. If you just willy-nilly hire Johnny Smith and he has a terrible driving record, that could cost you, I mean, the highest I've really seen, one bad driver cost one of my clients $11,000 a year, additional premium because that driver has a bad record. So really check your driving records of your potential hires before you hire them. Have a cell phone usage policy, okay? Cell phones can be useful if somebody is following driving directions, how to get somewhere. They're not having to quick slam on the brakes. They're not having to do the U-turn to go back because they missed the turn. So cell phones can be useful, but not if people are talking and distracted. Don't make the mistake of having your employees being efficient, driving down the road, talking on their cell phone. Have them pull over to use their cell phone at all times. If you have any kind of trailer, you want to cover it under the commercial auto policy also. For theft and everything, you schedule that trailer right onto the policy. You wanted to say something?
Yes, I think you're getting into an area which is very important for everybody to know, and that's basically good communication with your insurance agent, because it sounds like there's all these things that maybe we don't think about that we need to know about. So probably just being open and honest with the agent early in the process is great. And one of the things that might be able to do is like what you just mentioned about checking out driver's records. So I'm sure everybody's interested in how they can save money on their premiums. So I guess because there's so many different types of insurance, that's one of the things you'd want to talk to the agent about. Or are there things that I can do to mitigate risk or reduce premiums and avoid having to pay those really high costs?
Yes. Okay. Some of the ways that you can avoid paying more money for insurance than you already have to pay is to have a safe operation. Okay. Really, with housekeeping, if you have people coming to your business, keep it safe, keep it clean, keep the floors dry. Outside your building, do you have trip and fall hazards? Do you have lighting where, you know, somebody's not going to get attacked in your parking lot because it was dark? Just really look at the safety of your premises for your visitors that are coming to see you. If you have any kind of construction operations or lawn care, you're doing electrical work or plumbing or anything, just be super extra careful. Have a safety program if you have employees. Always focus on safety. It's always going to save you money in the long run. Don't rush your employees. A lot of accidents happen, the last couple hours of a Friday afternoon when they want to hurry up and get out of there and they're tired and they're doing something. Talk about safety with your employees. Whatever operation you have, talk about safety, talk about safe driving. We have a client that he was having a lot of accidents with his company vehicles. And I said, you're going to run into a situation where this premium is going to go up significantly because of these accidents. You have to figure out a way to have your employees stop having accidents. They have to slow down. He said, well, I fire them if they have an accident. And I said, well, now it's already on your record and you fired them, but it's not still, the insurance company paid that claim out. And what we have to show for our, when we're shopping your insurance for you, we have to show 3 to 5 years worth of loss runs. So if you've been in business 3 to 5 years, always keep your loss run. It's a report. It's called the loss run, RUN. Ask your agent for it. Hold on to it forever. You might be in business 10 years. You've never had a claim, but you can only get your loss runs going back 5 years. It's just a report from an insurance company that shows this person was buying insurance from October 1, 21 to October 1, 22, and there's no claims on this policy. Get the loss runs from your insurance companies We have to show, here's the claims that this client has had for the last 3 to 5 years. So just try to avoid claims altogether. On auto, if there's ever a chance that you may have hurt somebody because somebody was in a vehicle that you hit, turn it into the insurance company. Let them deal with it. Never admit liability if you get in an accident, okay? You can say, I'm sorry that happened, but don't say, oh my gosh, I'm so sorry I was at fault. Don't admit liability. Just say, I'm sorry that happened. I'm going to turn it into my insurance company. Let your insurance company defend you and protect you. That's what they're there for. If you admit liability and your insurance company could have got off that claim, but because you admitted liability, there can be an issue with your insurance company. So just don't admit liability. Call around and talk to a couple different agents to get premiums, get a good relationship with your agent. You don't have to shop it every year. My agency, we're an independent agency, so we can shop different insurance companies at our own agency. If you're with State Farm, for example, they can write you with State Farm. Now, State Farm can be extremely competitive. So sometimes I'll have somebody call me and say, can you quote me? And I say, well, you're with State Farm. We probably can't save you money. But, sometimes I'll try. Okay, so call around at least, maybe every 3 years and check to make sure that you're getting the best premium and coverage, okay? Look at the deductibles, look at the hurricane deductibles, look at all that stuff. The general liability policies have deductibles also. It can be a $0 deductible, it can be a $500 deductible, it can be a $1,000 deductible, it can be $2,500, it can be $5,000. If you send a subcontractor to do the work for you and that subcontractor doesn't have the proper insurance in place, your deductible might be $10,000 if that subcontractor causes a problem, bodily injury or property damage to a third party. So look at all the deductibles, look carefully at everything, and just run as safe of an operation as you can possibly run. And then you're going to hopefully save money. Also, look at, before you buy a building or lease a building, look at the different costs of insurance. You might have 3 different options for the building that you're going to be in. Call your agent and ask him to quote all 3 of those buildings. It could be a significant premium difference every single year that you're in that building. So that's another way to save money. On the workers' comp, if you have a drug-free workplace, you can save money. Now, usually that only makes sense to do in the construction industry because the premiums are a little higher. Saving 5% of $500 a year is not going to be enough to put a drug-free workplace in effect because it costs a little money to do that. But have a great relationship with your agent. Make sure you're getting the best premium you can get. And feel comfortable to call your agent and say, I had a situation. What would you recommend I do? Should I pay it out of my own pocket? Should I turn it into the insurance company? Have a good relationship with your agent. I think we're running out of time.
Yes, we're at the top of the hour, and this has been so informative and helpful. There were a couple of other questions, and one had to do with what is cyber liability insurance, because a lot of our clients are now getting online businesses, or they do something completely technology wise, and they're not really meeting with people individually and in person. So that was one of the questions. And another one had to do with, do you have any information on providing medical insurance for your employees? I guess that would be like group health insurance. So if you could maybe wrap up with just a couple of comments on that.
Cyber liability insurance is very important if you are collecting personal information from people like credit cards and names, dates of birth, driver's license numbers, and things like that. Sometimes we could tack some cyber liability coverage onto another policy for you very reasonably, sometimes $80 to $150 a year, depending on your risk. Sometimes the insurance company is going to say you have to have a separate policy for cyber, and we can get quotes for that. Typically, those policies start off at about $1,200 a year, but ask for a quote for cyber liability. There was a handout that I gave you, and there's a summary of all the different coverages that you can get for cyber liability. You can protect yourself let's say, for example, somebody hacks into your website, shuts it down, and you don't have any sales going on your website for 5 days because somebody hacked in and shut it down. You have a loss of business income. That can be covered if you buy that coverage. Let's say somebody hacks in and gets your customer's information. You can be covered for your customers to be notified, and then they can get credit monitoring services. That can all be part of your policy. Your insurance company comes into your business and gets the hackers out of your computers. It's all those things that are covered under a cyber liability policy. And if you need a quote for that, just let me know or let your agent know. What was the other question?
It had to do with health insurance for employees, your staff.
Health insurance is not something that I work on at all, but I can definitely refer you to somebody for health insurance. Her name is Kim Stanley, and her phone number is 904-247-6752. And it's Kim Stanley Insurance and Financial Services. She does individual and group health and everything like that. One of the things that I didn't get a chance to talk about is workers' comp insurance, and that's another huge, important topic. What I recommend is that you get a quote for workers' comp insurance. As owners of a business, you can cover yourself. If you get hurt while you're working in your own business, it is not suing yourself. Workers' comp is a benefit, just like health insurance is a benefit, okay? Either you buy the coverage for yourself as the owner or you opt out. But know how much it will cost you to buy it for yourself before you opt out. If you have any employees at all, get a quote for workers' comp insurance. If you're in the construction industry, you absolutely have to buy workers' comp insurance, or you can be exempt from workers' comp. And there's a handout on this, pages 8 and 9, very helpful information about workers' comp. Or feel free to call your agent, or feel free to call me. But get a premium for workers' comp if you have any employees at all. So many people will say, if you have 3 employees, you don't have to buy it. Okay, but if you have 2 owners plus 3 employees, now you're past the 4 people and you absolutely have to buy it. If the 2 owners are exempt, they've opted out of buying it, then you have 3 employees. Now you're under the threshold where you have to buy it. However, if one of those 3 employees gets hurt, they can sue you, and you have nothing to cover you or defend you or protect you unless if you buy workers' comp insurance.
It's been really helpful, Vicky. I'm so glad that you were able to present today, and I'm really happy for all the people who attended. We had a really good turnout, and I did put your website and our website link in the chat. So if anybody needs to follow up, if we didn't answer your questions, or if you would like to become a client of the VBOC, we would be happy to help with any of that. So with that, I will just say thank you so much to everyone for participating today. And we look forward to having you join us on additional webinars or working with you as a client. Vicky, any?
Thank you so much. Thank you so much. It's been my pleasure.
All right.
Have a great day.
Thank you. Thanks, everybody.